Hey, it's Soleil. This is episode 304 of the Orange Pill Investor. I hope I'm going to check chats and make sure the stupid ass shit is actually recording. So let's see. I hope. All right, so I do see something in my live here. Let's check X. There we go. All right, well, looks like we can see something. Hopefully this lasts so I don't talk for an hour like last time. Pop out chat. Let's do that. And we'll put the YouTube chat right here. What's up, Kanal? Good to see you. Hopefully, my screen's actually visible. Apparently, I talked for an hour yesterday and couldn't tell because I'm my two new laptop monitors are going to be delivered today, as a matter of fact. So I'm just on a single laptop screen right now, so I got the chats minimized. And it didn't occur to me that I might have some technical difficulties yesterday, but I did. So, can you actually see the screen today? Is that is there actual signal going through? Thank you. Appreciate it, Kanal. What's up, Junkrat? What's up, Dill? So, we got some good vibes coming in through today. And so I need to check and see. It's a small little pump, but it might be enough for maybe to just add one covered call. We'll see. I like to use Tasty Trade's metric IV rank. Which is probably still going to be under 50. If it's over 50, I'm not saying that's the end all be all for whether to decide whether to sell a covered call or not. I've seen some videos where they say, on average, they like IV rank to be over 30. And IV rank is just Tasty Trade's metric, and they track the implied volatility over 365-day period, and they rank them from 0 to 100. So if it's 0, that's like the lowest I've implied vol for the year. It doesn't mean that implied vol is 0. It just means that, ranking them, that would be the lowest. So it does make sense that over 50 would indicate a fairly high implied vol. And I missed out big time. I noticed how high the IV rank was. It was pegged over 100, actually. Which is occasionally possible when the IV is the highest it's been for the last 365 days. And when we had that pump to 500 a share, this was like the needle was basically just pegged because the IV was higher than it had been for the whole past year. So I really should have just YOLO'd and sold covered calls at that moment. Kind of missed that. I think I maybe sold one around that time, but the FOMO is kind of real. Like, it goes to 500, but in the back of your mind, it's like, well, is it going to 750? Is it going to 1,000? So it kind of got me off my game a little bit. I didn't want to limit my upside too much. And if the price had gone to 750, that would have looked like a genius move. But it didn't. We hit resistance, and for whatever reason, we're kind of I don't want to say languishing around 400 because, like, MicroStrategy for the year is is up 489%, and even just for the month is up 20%. So when it was at 490, it was 40% for the month. So really can't complain. But green days are opportune times for selling covered calls. Where are my positions? Okay, I've done something weird to my screen here. Why does this look different? I'm used to seeing my... Okay, I might have made my screen too big or too small or something here. I don't know. All right, the main account. I've got 7 covered calls on here that I sold for 15, and they're basically break even now. They've only been on for 8 days, and that's fine. I generally would want to manage them, either just take them off completely or roll them after 2 to 3 weeks. So got another week or two to watch these, and if the price is still around 400 a share, maybe I'll take them off or roll them. I've got these 5 leaps, and these leaps, their whole purpose in life is just to sell covered calls against. They're forming poor man's covered calls. So even if I take 2 off, I will probably continue to sell 5 covered calls for as long as I own these, regardless of whether the price is up, down, or not, because it's really, that's these leaps' only purpose in my account. When I'm buying leaps, I will either buy these deep in the money ones if I want to sell covered calls against them. Delta is very high, right? So these are 0.88 on each one, and they were probably only like a 0.7 delta when I bought them. And if I want to sell covered calls against these positions, then I buy them deep in the money, at least a 0.7 delta. It's a little bit more complicated than selling against shares because you have to get the strike selection correct so that you don't expose yourself to infinite risk. Selling covered calls against shares doesn't really matter. You can pick any strike, you can pick any expiration date, and you're never going to expose yourself to infinite risk because worst thing that they can do is just call away your shares. Let me turn this alarm off. All right, so I purchase the leaps that serves the, can act as the tool for my intention of what to do with it. So if I want to sell covered calls against them, I buy leaps. If I don't intend to sell covered calls against them, and I just am crossing my fingers and hoping that the number goes up, then I generally will buy the deepest out of the money calls that I can get. And the reason is because even though you're only getting a very small delta, which is you're only going to get small changes in the options price based on a dollar move for the underlying, you're able to purchase much more delta for a cheaper price. It's like shopping for the cheapest gas for your car, right? You want the smallest number of dollars for the most number of gallons. And that's the same way that I look at buying out of the money leaps. I just buy the cheapest ones because I want the cheapest amount of money for the most amount of delta. And one delta is just the price appreciation of one share. So these 2005 shares equals 2005 delta. There's a 1-to-1 ratio. However, and let me just look at something that I have an even number of. All right, so these January 1080s, I mean, these might be absolute losing positions. They're definitely losers right now. They could become winners, I guess, if there's some kind of end of the year miracle with the price. But when I bought them, I paid $3,600 for them, and they're only worth $500 now. But that's kind of beside the point. What I was really looking at is the combined delta here is it's the equivalent price action as 12 shares. And the current price right now is $5. So multiplying those together, that's 60. And we're talking options here. So that would cost me $6,000. But 12 shares of stock would cost me, what, 96? No, sorry, 1,000. 100 shares, excuse me, 10 shares would get me to 4,000, and then another 2 would get me to 4,800. So did I do my math wrong here? Oh, sorry, this is sorry, this is 12 delta for $500 if I was buying these today. Yeah, and so um controlling 12 delta in shares would cost me 4,800, but I can control 12 delta with these 1080s for only $500. I don't know why I was trying to multiply these together. Let me just check the chat and make sure that I'm still actually uh I'm so paranoid. Let me just check the chat and make sure that I'm still okay. Looks like it. Nobody's telling me that I have a freaking black screen, so that's good news. All right, so the point is there's only two things that I personally buy leaps for. One is deep in the money to sell covered calls against. The other is completely speculative. I just want the number to go up. And in that case, I buy all the way to the top of the chain because I want to pay the least amount of money for the most amount of delta that I can. Maybe I'll make this a little bigger if I can. Yeah. So I can control 12, the price action of 12 shares for $500. Whereas if I bought 12 shares, it would cost me whatever it was, 4,800. And the beauty of that, even though, is that delta is only showing you how much the price will go up for a $1 move. But there's another Greek called gamma that affects what delta's number actually is. So if MicroStrategy goes up another $100, then delta is going to increase by the value of gamma. So delta is like, okay, how much will $1 of MicroStrategy's price increase this option by? Okay, that delta is 0.06. But if the price goes up $100, then this delta might be up to 0.1 or 0.2 or something. So right now we can only get 6 cents per dollar, but if MicroStrategy goes up, then we might start getting 10 cents per dollar or 15 cents per dollar or 20 cents per dollar. But you still paid the same price for it, right? You're getting, as MicroStrategy's price appreciates, you're getting more delta basically for free. Now, I don't want to hype these up like they're a can't lose thing because theta is making the value drop out of them. So you need an up move that's going to be faster than the down, the value that's decaying via theta. Oh, and sorry, this is 500 per contract, and I have two of them. So it would actually cost $1,000 to control the delta here, not $500. But these are still pretty risky. I mean, you need serious price movement by that date. So these Januaries, I've only had them open for 20 days, but that was pretty risky. If I lose these, on this bet, I kind of deserve to, because I was FOMOing into these 1080s when the price was, at all-time highs. So this was probably not the smartest thing to do, but I bought into that January hype a little bit, and probably let that get the better of my decision making. I much prefer, these Aprils, even though they're only at 127 days now, I've had them for 40 days. So in another 40 days, when these are approaching 90, I will roll these out to 180 days again. I'm not going to let these get in a position where they're so short dated that now I'm in a position where I need something to happen right away, or I lose money. And then, of course, the December leaps, these are over 365 days, and it's still not a lock. Like, it's not a guarantee, like, oh, if I go out a year, I'll definitely make money. Like, specifically, if the bear market continues, then anything anything expiring like end of 2026 or sometime in 2027, that's not going to save you if the bear market rears its ugly head again. I know some people don't believe it will be as bad as it has been in the past, but I personally, not financial advice, but I will personally not be carrying any long call leverage beyond like January 2026. If I want to take some profits in 2026, for me personally, since I have to show profits every year to be able to, like, borrow money and buy a house and stuff, I may try to delay some of that profit taking to 2026 if I can, which is why I bought these January 16th, 2026 leaps. And again, I've had those for 20 days, but these are losers as well, right? I bought them for 162. They're only worth 112 now. But I'm not at all worried because I have a year left. These 1080s, damn it, these 1080s in January, yeah, kind of worried about these. But there's really nothing to do about it. I mean, I could roll them out to April, but I'm not going to be able to afford much. So I'm probably just going to let these print or die an honorable death. All right, so that was the long ass way of saying, that's the reason, the reasoning behind my leaps or my long call strike and expiration selection. And before I run my mouth for too much longer and miss the frickin' trading window, I'm going to go ahead and make sure, yep, I'm in the right account. I'm going to go ahead and add one more covered call since this is a green day. So let's trade. Now, should I get, let's see, this is Wednesday. If I wanted to sell a weekly at the money, I could get paid $1,300. No upside whatsoever. Like the 415 strikes. But I don't know if that's worth tempting fate. So if I go out to January 24th, that's 44 days. And here I can go grab something out of the money, give myself a bunch of upside. Price is $400 a share now, so if I want to collect at least 1% a week, and I manage this in 2 weeks, then I would have to sell it for at least $1,600, which is, holy shit, that's right at the top of the chain. So that'll work. If the price doubles, then my shares would get called away, and that's not a bad deal. So my limited upside is basically double today's price. And if I can buy these back in 2 weeks for 800, then I will have made $400 a week, which is, 1% returns per week. So let's see if I can get a fill here. And I think I turned my volume down. Okay, good. I just about blew my freaking eardrums out the other day. All right, that did not fill. So let's put it through again for a little bit less moolah. See if I can get a fill at 1640. I don't hear anything happening. Okay, there we go. Cha-ching. All right, I am fine with that. Sometimes it's, it's superstition or whatever. It's fun to think about, but I almost kind of feel like, okay, I'm throwing a little bit of bait out there for the markets to punish me. Like, please send the price to 950 so that these can get called away. Like, I would be more than happy for that to happen. Now, where is the covered call for January 24th? Okay, there we go. There it is. Couldn't find it. All right, that works for me. That might be the only trade I actually make, but while I'm here, let me just take a quick look at the IRA. Yeah. I've got these 10 530s. These could go in the money. This 1080, probably not so much. And I've got one 550 strike. Interesting. If the delta on these was like 0.6, 0.7, I might think of selling a covered call against them. However, I could probably put 3 of these together and sell covered calls against like 3 of them. And forming some kind of ratio spread. But the price at 410, that's not like that super exciting. If we get to 450, 500, maybe I'll think about something like that. But I do have the 2 covered calls against 2 leaps. And I've got 291 shares, so I almost have enough shares. If I wanted to put on 3 covered calls, I'd have to have 9 more shares there. So I think I'm pretty satisfied with this. The joint account, same thing. I got 1 leaps, 1 covered call, 80 shares. Yeah, nothing spectacular that I need to do here. And my allowance. I did peel off 15 shares yesterday. And what did I buy? Yeah, I bought this bad boy. Oh, excuse me. I bought this. Oh, good law. Okay. Why are you covering up? Anyway. All right, it's this line item here. I bought this June 1080. And unlike all of those losing positions, I have, this one's actually up overnight since obviously the price has appreciated. But even this leaps that I've been selling covered calls against, like this is down, what, $20 a share, so $2,000. But I've been collecting these premiums. So hopefully the amount of money that I've been selling covered calls against has made up for the depreciation in this leaps. Let me just scroll out a bit. I've only had that open for 6 days. I must have rebalanced this account. Okay. That's fine. Let me just take a quick look at the 5K account. Yeah, all this stuff expires on 13th. Nothing to do here. And I've got a whole week to decide what to do with these $13 calls right at the money right now. And it's funny because I actually sold them for $1.11 and they're worth $1 now. So I technically could roll these. I could roll these all for profit. If I want to roll them out to 45 days. Interesting. Let's go ahead and let's just check it out. If I roll this position, I'm going to pay $1 to roll them. But if I want to roll out to 44 days to expiration, and if I want to collect 1% a week, I got to do the same trick again. I got to multiply the price times 4. So 1% is 13. That means I would need to collect 13 times 4, which is 52. So as long as I collect 52. Okay, the liquidity is shite out here. But it would probably be, yeah, the bid ask is 64 to 96. All right. So anyway, way the hell up there. But I could choose a nice even strike at $20. And if I can buy this back for 50 cents in 2 weeks, that's like what, 40 bucks profit, which is like 3%. So that works. Let's do that. Let me sell. Oh, but this is basically breaking even. You know what? I'm gonna wait. I'm gonna wait, and here's why. This is basically now a weekly. Since this expires on 12/20, this is basically like selling an at the money covered call, and there's almost $1 worth of premium in there. So that's pretty good. If I simply just do nothing, then this 95 cents in value will drain out of this option by next Friday. There will be no extrinsic value left. Now, if the price goes to 15 a share, 94 cents of extrinsic value will drain out, and $2 of intrinsic value will go in. But at least if I roll on expiration, if I roll on the 20th, I won't have to pay this $1 of extrinsic value. So I talked myself out of that. I'm just going to wait and see what happens. I'll roll this next week. Same situation for Riot. Yeah, it doesn't make sense to get paid $1, but pay $1. And yes, I would have given myself way more upside, up to $20 a share, but I wouldn't really be collecting any additional premium. So I'm not going to do anything there. Let's check chats and then call it a wrap. All right, so I still don't know what screwed up yesterday, but luckily Riverside saves, and we don't need to look at frickin' Inception here. Let's put this up front. And then I'll bring the chats up. All right, cool. Put your questions in the chat. We'll try to get to all of them. Oh, Junkrat says audio off or just me delayed. You mean? Yeah. I don't know if that's my connection or what. I'm probably gonna have to shop for a new laptop as well, and I don't know if that's just built into the delay in the live stream. I hope not, but I can't use visual effects because it said that my laptop doesn't meet the requirements, even though it does. It's a 4-year-old laptop, so probably needs to get replaced anyway. K Force says, "Hi, boss. Tesla is at 420." That's freaking awesome. Yeah, I sold all my Tesla right before it doubled, but MicroStrategy is up more than Tesla is as I've been trading it this year, so I'm not crying in my beer. Canal says, "I continuously kick myself for never investing in Tesla." Yeah, I'm going to give myself another chance in 2025. So when MicroStrategy hits whatever, $1,000 a share or more, I will be rolling those profits into Tesla. And if the bear market continues and if I have half my money in MicroStrategy and the other half in Tesla, if half of my account goes down the drain in 2026 and 2027, at least my Tesla position has a chance to do something else. We'll see. Derek says, "Hi, what did you mean by getting strike selection right? Can you please give an example? Thanks." Yes, absolutely. So if I wanted to set up a new poor man's covered call today, and I went out to December, that's over a year, so qualifies as a leaps. And let's get the 300 strike. Delta on this is 0.8, so I'm doing safe in air quotes over here, if anybody's listening and not watching. Anything over 0.7 delta is kind of like legit poor man's covered call scenario. So this is the first thing that you got to get right. You got to buy it deep enough in the money to get a high delta. The closer this gets to 1, it means the closer it acts like a synthetic stock. Right now you're getting 81 cents on a dollar. Let's see if I can make this bigger. Right now you're getting 81 cents on a dollar. But if the price collapses to, 350 or something, this might only be 0.7, you're only going to get 70 cents on a dollar. And you'll see the way that this graph forms up. We want to make sure that we do not expose ourselves to unlimited losses in the case that MicroStrategy goes to 500, 1,000, whatever. So I'm going to pretend like I'm going to choose this $300 strike. And then if I want to sell a covered call against this long leaps position, I generally like to go out to 45 days because it gets a little dicey trying to sell weeklies. And so if I go out here, and again, I'm going to say let's just say I want to shoot for at least 1% profit per week. If I manage this in 2 weeks, that means I would be buying it back for half price. So if I sell it for 16, I'd be buying it back for 800. And 800 over 2 weeks is $400 a week, which is 1%, returns per week approximately. But actually, I'm getting ahead of myself a little bit. Going that route is kind of like putting the cart before the horse. That's like saying how much money I want to make before I check to see if it's safe. So there's a formula that I found on, I think it's Blue Collar Investing or something. I'll put a link to it in the X chat. If you're watching on YouTube, just go to X. That's where the link to the page will be. But there's a formula that they came up with to form a quote unquote safe poor man's covered call. And you take the short strike that I'm about to select, you subtract the long strike, which I've chosen 300. You take that number, you add the premium that I'm about to get paid. So let's just say I select this one. And then that number has to be greater than the value of the long call, which is 216. So I already know this one absolutely qualifies, but let's just go through the example. We take the short strike minus the long strike. 780 minus 300 is 480. 480 plus the 16 that I'm getting paid brings me to, how did I say 480? 496, and 496 is well above 216. So if I want to see what strike, what's the bare lowest strike that I could select, I can kind of shortcut that by adding the 300 to its price. So if I go down to 516, this range right here is probably the lowest strike that I could select and still get a very green chart over here. So you'll see what happens when I select this call. So there's a bunch of green here, right? And then this slope after we get to 525, right? This is when you can stop making money on your covered call, is beyond the strike that you selected. And so you don't want to see a very sharp down line here. This has to be very gradual descent. Otherwise, when you get to the unlimited losses here, you'll have a red chunk. So, and let me just go to the weeklies because this will give a good explanation of why strike selection on a poor man's covered call is so important. I said you had to get to what? 4. Yeah, you had to get to 516 strike in order to make this somewhat safe. So if I said, oh, you know what, I'm going to do a poor man's covered call and I'm going to sell a weekly at the 410 strike, like right just above at the money, right? You have this tiny little green window here. And if the price goes above 488, you start losing money. And eventually you would put yourself at risk for unlimited losses. So don't think that you can treat poor man's covered calls like you do covered calls. You can absolutely wreck yourself if you think, oh yeah, I bought this Leaps and now I can just sell weekly at the money covered calls and get paid $1,300 a week. That's not how this works. But even on the weeklies, I said it's a little dicey, but if I go to the 525, yeah, I mean, look, and this is why. I could get $80 this week, but there's a lot of green here. This is a safe-ish trade. But, $80 a week, it's not really getting me excited. So that's why I go out to approximately 45 days to expiration. And anything above this 525 strike should be money. So let me just check the 525. Yeah, I got a nice graph here. Or the one that I just sold was this one, right? So anywhere between 525 and the 780 strike would all be safe trades. You're just having to decide, do you want the trade-off of getting paid $3,800 and you're sacrificing all the upside above 525, or do you want to take a little bit of profit every week, but the price can basically almost double before you start sacrificing your upside? But yeah, so that's why you have to be very careful when you're forming a poor man's covered call. If you choose a strike that's too low, then you put yourself at unlimited risk. Adam, how's it going? Right back at you. Kanalta says, I was wondering if you could go through an example scenario of a day where MicroStrategy dips hard, like insane dip, talking to high 200s range. How would you go shopping for leaps if one wanted to load up? It's the same thing, really, that I was describing before in my Tasty Trade account. So let's get back over to here we go. It all depends on what I want to do with it. If I want to sell covered calls against it, I'm buying deep in the money leaps. So high 200s, I mean, the 200 strikes for December might still actually be, they'll still be in the money. So they might even, if they're still at least a 0.7 delta, I might buy these. And then for every single one of them, I would start selling covered calls against them. I would do something like that. Or if I don't want to do that, if I just want to buy leaps and do nothing and just sit on my hands, then I'm probably going to go to December 2025 or January 16th, 2026, depending on what year I want to pay the taxes. So let's just look at the 2026 ones. If I'm not going to sell poor man's covered calls, then I'm probably just going to go to the top of the chain. Good Lord, this is a pain in the ass. Yeah, I'm probably just going to go to the top of the chain right here. Motherfucker. All right, there we go. Hopefully this isn't too small. I can't make it work. And so in this case, a delta is 0.45. So that's like controlling 45 shares. The price action of 45 shares. And this is only going to cost me 9,500 instead of, the 40,000 that it would cost me to control 100. So I should multiply this by 2.1 or something, right? So let's just round it to 10,000. I can probably control 100 delta or 100 shares with half the money, right? I can buy 100 shares for 40 grand, or I can buy 100 delta worth of long calls for basically 20 grand, around half price. So these leaps, as far as I can tell, are the most efficient use of capital. But that doesn't mean that's automatically the thing to do every single time. I like the fact that there's at least a year to be right. And the farther out you go, theta is lower. But here's the trade-off. The farther you go up to this chain, obviously you're at more of a risk, right? Because if you're buying the 400 strike, then you only have to basically have the price go up enough to be, to reach your break even. But if you're buying the 1080s, I mean, the damn thing's got to go to 1080 plus 90. So it's really got to go to 1170, right? So it's a much riskier position, and theta is going to be higher for these out of the money strikes than for the at the money strikes. Theta at the money, even all the way in 2026 is 20, and it's 25 out of the money. So 25% more decay in this option than the at the money option. So riskier strike price, but you're able to buy more delta for less money. And that's probably what I would be doing, is whatever the highest strike is, I can get as far out as I can afford to, just to give myself more time to be right. All right, so that's the last X question. Let me see if there's anything happening on YouTube over here. Dr. Z says, working for me. Thank you very much. And then also says, you got a shout out today from Bitcoin Not Crypto. No kidding. I'm going to have to check that out. He made a video on selling covered calls and credited you with teaching him. Well, now I got to go watch it and make sure that he didn't bumfuggle the trade, because I can't have people misrepresenting the a safe way to do it. But that would actually be pretty cool. I'm gonna go check that out. I appreciate the tip. So Antoine Filion, congrats on kind of retiring from a full-time job. Yeah, I know. I I was so stressed out on Friday from trying to get last minute stuff done, make sure that I turned over everything, that I was just like, I was still trying to make my videos, but I'm like, I didn't even re-upload them or anything. So now that I don't have a real job, I should be able to do more research, good research, better ideas. Maybe I'll even figure out how to edit videos. But right now, I'm just kind of doing it on easy mode. Grit, what's up? Showing up late and we'll have to rewatch this one again. My goal is to acquire more shares and want to learn more about leaps. Thanks for tuning in. And then Antoine says, how come you are using web instead of software? Yeah, so I had a bunch of whiny complainer, whiny babies that said that they couldn't see the numbers. So I went to the web-based version to, just so that people hopefully during the live could actually read the numbers. I don't know if it's working. Hopefully I'm not kicking myself in the balls by trying to make this as big as possible for no reason, but we'll see. You can let me know if it actually is more readable. Grit says, what happens to leads if they do another 10-to-1 split? So just like shares, you get 10 times as many for 1/10 of the price. So if I let's just take a look at the ones that I own. So I've got a 450 for April. If they do a 10-to-1 right now, then I would end up with 10 of these, and they would be at the $45 strike. So 10 times as many at 1/10 the price. Just like if I had one share of MicroStrategy, I would get 10 shares of MicroStrategy, and the price would, go from $4.09 to $40.90. And that's why sometimes if you look at a stock that's just had a split, you'll see all types of weird ass strikes. Like, okay, yeah, like this 412.50, that's going to get cut, 10% of this. So you're going to have like a $41.25 strike. So it gets wonky. All right, let's see what else we got. Delete the account says you're such a legend. I appreciate that. JB says congrats. I appreciate it. R Hild says tasty trade referral link. Yeah, somebody made me look it up. I guess I probably should have just started putting it in the description. But there is one. I wasn't. Yeah, maybe I'll try to find it. Maybe I'll put it in the description. But you got to go into the account and click here, click there, and then it'll tell you what your code is, and you can copy it and paste it. I appreciate you asking. Grit says, thanks for the information. Thanks for asking the question. It's a good one. So I'll go back and check X real quick. Okay. Damn it. Let me get the popped out one. Canal says, can't thank you enough, my man, for all the explanations. You're absolutely welcome. J94, I have MicroStrategy 700 March calls waiting for the next leg up. March. Yeah, I like March better than April, or better than January. That's for sure. I got my fingers crossed for you and for me and for all of us. Canal says, yeah, I'm stuck in 600s expiring in April. Yeah, my Aprils, I will be rolling, what, in January, right? Yeah. Oh, cool. J94 says the screen's perfect right now. Thank you very much for checking. Kobe, did you see the probably fake rumors of a stock split? Think that helps the options market? There was rumors that it was going to help with liquidity. I do think psychologically it helps people who, you can buy fractional shares. I had my son doing that with his small account. I had him selling like, I think he had 100 shares of CLSK and 100 shares of probably Riot. And, he probably only made $20, 30, $40 on premiums, right? Selling covered calls on those. But I'm like, okay, just buy fractional shares of MicroStrategy. And when MicroStrategy was like at 125, he only buys like a third of a share. But then when MicroStrategy goes up double, you know, it's it ends up just growing at the same rate. And at one point, I think he ended up with, I don't know, it was like 1.3 shares or something. And then we sold those off probably to buy more, more mining stocks to sell more covered calls against. And I think he ended up getting his to the point where he could actually afford, maybe not a MicroStrategy leaps, but he ended up with some kind of long call. Hopefully it's not getting wrecked. Um, but it was supposed to help with the liquidity a little bit, but I didn't notice it getting any more liquid after the most recent split. I was kind of hoping that the bid ask spreads would get better. Um, yeah, I didn't notice anything great about it, other than there's people just FOMO into it when a stock split is always kind of like a bullish signal, so that can cause some people to just take a look at it where they otherwise wouldn't have. All right, Kobe also says, I noticed earlier that what the hell, QTUM ETF has a 3% allocation to MicroStrategy. Yeah, that's cool. Yeah, there's going to be more and more index funds that have it, and I'm not aware of all of the ETFs that include it. I'd like a Tesla MicroStrategy rebalance ETF, maybe with just two positions. That would get me interested. ADHD option says, good afternoon. Speaking of a 10 to 1 on X today, some accounts were mentioning their brokers were showing another incoming 10 to 1. I have not seen anything about that news. Um, yeah, it wouldn't change anything that I'm doing, but some people consider it a buy signal, I suppose. Russ, any thoughts on running a wheel on MSTX if can afford 50K? Really not enough for MicroStrategy. So I don't like any of the leveraged plays, and other people have probably done better explanations, but I'm going to try to explain it this way. Well, period, right off the bat, I don't like paying anyone a management fee. So that's a non-starter right there. I mean, I can do all of these trades for free, so I'm not going to pay somebody 1% to do it for me. I guess you're paying for their expertise or whatnot, but let's just say that they're trying to give you 2x leverage. If the price goes up from $100 to 110 on the underlying, then the price is going to go up from $100 to 120 on the 2x version. But if it goes down 10%, then the underlying goes, down, basically back down to 100, or I guess it would probably be 101. I'm sorry, 10% off of 110. Yeah, so it's going to go back down to the 100 where it was the day before, but the leveraged play is going to go down $20, $22, and you're going to be at $98. So there's some decay there when a leveraged ETF like this is experiencing chop, and it goes up $10 and then it goes down $10 and it goes up $10 and it goes down $10. The leveraged play is actually kind of trending down, and holding the underlying does not subject you to that rebalancing effect. So that's one reason why I avoid the leveraged plays. So between that and paying a management fee, I don't like the leverage. If I want 2x leverage, me personally, then I just do what I was talking about when I was talking about picking out the leaps. So if I go to January 2026 and I grab, sorry, it was the ones all the way at the top, right? Yeah, those are 0.45 delta. So let me look at the $1,000 strikes. Yeah, me personally, if I want 2x leverage, then I'm just going to go find something that's 0.5 delta and get two of them. That's going to cost me 20 grand, which is half the price, but I'm controlling 100 delta. So I would be controlling 100 shares of the stock for half the price. I think that's 2x leverage. So are there risks with doing this? Yes, but I'm not paying a management fee, and I'm not exposing myself to that rebalancing decay. I think some people have referred to it as slippage. Now, granted, this thing has its own decay because it's theta. It's, the value of this option is draining out, 26 cents a day. But yeah, I just go out and create my own leverage rather than getting a leveraged ETF. Where was I at? There we go. Canal says, do you follow James at Invest Answers? He's also MicroStrategy and Tesla and pair trades them up. I don't think so. I might have heard good things about Invest Answers. The other YouTube channel that I thought had pretty good videos, I think Ryan put me onto them. I think it was like Project Finance or something. I watched a ton of In the Money YouTube videos and Taste to Trade videos, but this Project Finance channel was pretty good as well. But Invest Answers, I'll check that out. So what was the other one? Bitcoin? Was it Bitcoin, not crypto? I got to take a look at. I appreciate that. I will check that out. Kanal says, I'll never touch MSTX or MSTU because of the volatility decay. It's a trap. Yeah, I agree. And then he says, those products are meant to be safely traded, held intraday, not overnight. Yeah, it's definitely not a long-term hold for me. I guess if I was a day trader, I'd maybe take a look at it. But Russ says, not to hold, but to trade. Cash secured puts and covered calls. If the premium is there, I suppose, but like at the same time, yeah, I don't want to hold it for very long. Even weekly cash secured puts, you'd have to hold it for the whole week. And then if you get assigned, now you own 100 shares of it. So yeah, I'm still not doing it. Canal says, I loved watching In the Money too. He's great. And then he had the entire medical fiasco that caused him neurological problems, which of course was all so interesting to me. Yeah, it was kind of crazy how he was having a real hard time getting good medical help. And the ridiculous ones I thought was like when they're trying to send him to psych, but him and his twin brother have the same problem. Like, come on now. Like, that doesn't even make sense. How would twins have the same medical problem and it's psychiatric related? So that was complete horseshit. But I think his GoFundMe did well. I don't know if he spent all of that money or if he's still accepting donations, but I thought it was a worthy cause. So I donated him what I could. J94, if we close above 100K for the next couple of days, higher. Yeah, we need to make 100K the floor and not the ceiling. That will make me feel much better. All right, a couple more, and then we're gonna call it. Um, R Hild says, "Yeah, just start leaving in video descriptions since you since you're full time now. I appreciate that. Delete the account. What's the odds of my 600 strike calls for March expire worthless? Okay, just look at the delta. That's it's not an exact approximation, but it's close enough. Like the 600 calls for March. Let me just look at them. The market makers are saying the delta is 44. So they're saying there's basically a 44% chance that we go. Wait, is it a 44% chance that it goes in the money or out of the money? All right. Let me reverse engineer myself into this. Yeah, it's probably like it's basically a coin flip. If this delta is accurate, it doesn't necessarily, it's just a oh shit. It's just a go by, right? So I think they're saying that there's about a 45% chance this goes in the money and a 55% chance that it stays out of the money and expires worthless. You know, what are the real odds? I don't know. I don't know what calculations they use to figure this out, but I think it's probably right enough times that it's a reasonable estimate. Like you should if you do this 100 times, you'll probably win 45 times and you'll lose 55 times. DWNFT says, could you please explain Greeks again, particularly theta, when choosing an expiration date for covered calls? Yeah. So some people were saying, oh, yeah, I'll just sell a covered call, out to January, and I'm going to collect 183, you know, I'll sell 10 of these and I'll just collect like $180,000, right? Which you can do. But theta is so small that you're going to have to wait a year to get that money. Like the money's in your account, but you can't exit the trade. Like if the price does go to 500 or 750, now you're just locked into this trade or you have to pay to get out of it. So I want theta to be higher, and I don't really look at delta as some people will just automatically sell the point 0.3 delta every time. And I think that's a good starting point. So where was I at the 525s? That's 0.38. So I could go even a little higher. Let's look at the 600. Yeah. Some people will just automatically they just love the 0.3 delta, or they sell the 0.2 delta, or they sell the 0.4 delta. But I don't really, as long as I'm, close, it's probably reasonably it's probably reasonable. But I actually look at, how much premium I want to collect, and I compare that to how much upside I want, potential that I want to bake into the trade. So I don't use delta anymore. As a new covered call seller, I would go to the point 0.3 delta, and then I would kind of slide up or down from that strike. Like, oh, maybe I want a little bit more upside and get paid a little bit less, or maybe I want to get paid a little bit more and give myself a little bit less upside. And maybe I would be a little bit superstitious with it, like, okay, am I opening this trade on a green day? Maybe I'll pick a lower strike because I've already captured some upside. Or if I'm buying 100 shares on a dip and I'm expecting a rally, okay, maybe I'm choosing a higher strike with less guaranteed premium up front just because I want to capture a rally. So I don't use delta as a like, oh, I just got to go to the 0.2 every time. But theta, you can. The reason why I stay under 45 days is because when you saw on those ones that were like a year out, theta was like 0.2, right? So only like 20 cents a day was draining out of that account. So that's why I'm not selling the ones that are a year out. I'm buying those. I'm buying the ones that has a small theta, and I'm selling the ones under 45 days that have higher theta. I want to be able to buy this back for cheaper as soon as I possibly can. So I want theta to be as high as possible. And if I look at the weeklies, I do like the weeklies. Theta is going to be even higher. Yeah, theta is sky high on this one because there's only 2.5 trading days left. Actually, 2 trading days left, and this whole $1,300 has to drain out. So probably tomorrow, like $300 would drain out of this, and then on the final trading day, like the last $1,000 would drain out. So there's a theta curve on every option. So when this says, $3.33, 31 cents a day is draining out, this theta is going to be fluid as well. And the closer we get to expiration, theta is just going to keep getting higher and higher. But those are the only two Greeks that I really worry about for selling covered calls. I'm going to look at the delta and I'm going to look at the theta. But at this point, I just know what they mean. I'm selling covered calls under 45 days to expiration because I know theta is high, but I don't need to go and look at it every time. I just know that that's true. All right, that's the last question on YouTube. I'm gonna check X one more time, and then we done. All right. Kanal says, I know it's not financial advice, but is there a potential covered call that you would sell today that expires on the 13th this week? If I had 1,000 shares. Well, I wouldn't, like, if I had 1,000 shares total, I might just do it on like one or two. But, I don't know, 10, 20% out of the money. 10%, $40. So, like, the 450 or the 500s, is there any premium there? Yeah, I mean, you can get $300 at the 450. Can't really, I'd be able to get a little. Yeah, I don't know if it's worth it to sell at the 500. You can get $100. And then, as long as the price doesn't go up 25% in 2 days, I mean, yeah, 10 to 20% out of the money, I think is reasonable. That would be 1%. 373, getting paid 373 is almost 1% for half a week. So if you do that 50 weeks in a row, that's 50% returns. But yeah, I mean, I don't know that it's interesting enough to just YOLO into 1,000 shares. I mean, unless I had 10,000 shares and 1,000 was 10% of that, that might make sense. But yeah, I'm really, I did sell, one today, but yeah, I want to see IV rank go up to 100 again. I want to see the price rip to 5, 6, 7 before I go a little nutty. All right, appreciate everybody tuning in. I'm glad didn't have technical difficulties today. I guess I got to add that into my daily routine. Just do an audio and visual check. I don't know. All right, be good, y'all.